What's going on, everybody? My name's Henry. Welcome back to my channel, Intelligent Investors. Today we're talking about the value plays I made this week. I traded just under $35,000, which is just a small fraction of my portfolio that's mostly in Tesla stock. Not only am I going to discuss three, count them, uno, dos. Today, cheap growth stocks, but I'm also going to discuss why these stocks could see massive explosions to the upside and why I put my money into these. At the end, I mentioned a stock that I'm eyeing for Monday that I might trade some options on. You're probably wondering, what are these stocks, Henry? Get to the part where you share your 7 years of Wall Street experience and flood my pockets with cash. All right, family, here's the list of the three stocks I bought this week. Number one, my biggest purchase that we'll talk about later, is NEO. Number two, Virgin Galactic, right before the juicy skyrocket, no pun intended. Number three, my daddy's company, Tesla. If you just want to know my thoughts and research on these, cool. But if you want to get stupid rich, then smash the like button and become a subscriber of this successful investing channel. So I invested $25,000 in NEO literally on Friday because I saw it retracting down, and I've had this one on my buy list for some time. It has recently peaked at $14.98 as of July 10th closing and has really sold off and lost 25% of its value. The company is disrupting the Chinese electric vehicle market, and after spending hours of extensive research on them, I decided it was time for me to get in. Here's a quick summary. The company is basically betting that its luxury ownership experience in advanced AI-powered electric models, which include autonomous driving capabilities, will set it apart from Tesla and the many other EV startups in China. Those startups include Byton and Xpeng Motors. NEO delivered 3,740 of its upscale electric SUVs in June, up 179% from a year ago, as well as a total second quarter deliveries of 10,000 plus vehicles. So the growth has been unreal for them, plus the overall China EV growth story in general. What really caught my eye is their focus on young professionals. China population is exploding, and they have a lot of young people that are starting to earn some real cash. With the cash, they will absolutely buy luxury goods. I have Chinese friends, and they always tell me how the Chinese love brand names. They secured nearly $1 billion in new funding from the economic development authorities. Basically, Hefei, which I still don't know if I'm pronouncing it right, is a city west of Shanghai, and they agreed to give them a small loan of $1 billion if the company sets up their headquarters in their city. Kind of like how every city bid and promised their underwear for Amazon headquarters too. As I mentioned in my NEO video, what really made the difference for me was their range. I still can't believe NEO ES8 boasts a whopping 580 kilometer range. That's 360 miles, which actually beats Tesla Model 3. And to be honest, I'm calling it even because companies are usually off a few miles, so I'm just going to be conservative and round NEO down to where Tesla is at today. All that being said, plus the analysts are raising their price targets, which I really just give a grain of salt to. I never actually listened to any analysts on Wall Street. The second company I picked up and have been making videos on and investing in for a while at the 15 level is Virgin Galactic. There's two videos I made this week, and one of them I couldn't have made at a more perfect time. I think my subscribers are shooting up because a lot of people made good money and are glad I called a short squeeze on this stock. Basically, I've been watching Virgin Galactic very closely, but one thing I was going to happen is a short squeeze because pretty much of the heavy short interest. I'm a numbers guy, but I could seriously feel the short squeeze coming. Here's an image of Virgin Galactic short volume. The main driver I'm looking at is that it isn't sustainable, and I'm not even going to say in my opinion, I'm just gonna straight up say shorting is not sustainable forever. The reason being that it's expensive to short stocks. If I want to short a stock, I actually use options because the way I trade options is way cheaper. If you want to learn more, just follow my Patreon page where I post option related content. Hedge funds are definitely shorting Virgin Galactic because it's definitely not Robinhood investors that have to pay all this interest on shorting this stock. And not only do the hedge funds have to pay interest, but your return on shorting is also limited. How much could you realistically make shorting? Well, 100% is max if a company goes completely bankrupt. Whereas owning a stock, you can literally go to the moon. So that coupled with some call volume I saw in the options market, and I knew that this company was just one good news article away from crushing some short sellers and having a breakout. To be honest though, I had it at $15 and I may start taking profits on Monday to invest in other companies I am talking about on my channel. I still like Virgin Galactic, but when stocks rise a lot, I do tend to cut my position a little bit so it doesn't grow too huge. Another thing, which I'm not even going to try to say I thought would happen, is Virgin Galactic announced George Whitesides will step down as CEO and they are appointing former Disney executive Michael Colglazier in his place. I did not even remotely imagine that would happen, which is actually a good thing and a pretty good bonus over the weekend. This dude's gonna completely crush it. He has 30 years at Disney and this guy just is a complete shark. My mans might even bring his whole crew from Disney over. So I think I had a genius subscriber comment Virgin Galactic will partner with Star Wars. That comment was like 150 IQ. I'm so jealous I'm not that smart for coming out with that. Lastly, well, kind of lastly, I added a little Tesla. I put steady amounts of money in Tesla and it represents a majority of my portfolio. This isn't just, wow, I discovered this about Tesla, so I invested in it now. It is more of a long-term plan I had since I started watching Chicken Genius Singapore and Solving the Money Problem. They really helped me understand Tesla even better on the top of the research that I was doing myself. I made my first purchase at mid 300s, but obviously with dollar cost averaging, my average price has went up to slightly over $500 per share, which is fine. If you guys want a video just on dollar cost averaging and my view on what I learned about it at Goldman Sachs, just drop a comment. I'd be happy to share that in another video. While I was working as a quant, I studied earning revisions and I really researched how a company reports its EPS or earnings per share. And Tesla has really surprised Wall Street many times now. They actually beat earnings 3 quarters straight, and I would be surprised if they don't beat again. Last time they were supposed to report negative earnings, they actually came in at a whopping $1.39 per share beat. We just don't know what to expect from Daddy Musk. But if the shorts sold out, then I'm sold on personally holding the stock into earnings on July 22nd. The biggest catalyst we see as early as July 31st will be a Tesla inclusion in the S&P 500. And in case you missed my last video, this would basically skyrocket the stock for a number of reasons. One reason would be the flood of money into the stock from index fund investors. Tesla is accelerating the world's transition to sustainable energy, and once it gets included in the S&P 500, a lot of investors will have their money go into the stock because that's how index funds work. An index fund gathers investors' money and spreads it over many different stocks. It's similar to a mutual fund for my slightly older audience that may have mutual funds. I've called Tesla the best investment of our generation a few times, and as much as I trim my position, I never plan on selling this one until I see growth completely stop, which ain't happening. Not today! So that's 3 stocks I invested in. Now for the bonus, if you're still watching, I've been trading options for 7 years and learned from multi-millionaires on Wall Street, but I want to be honest and say options are extremely complicated and I do not recommend them for most investors. I lost tens of thousands of dollars acquiring the knowledge and making mistakes while learning to trade options, and it is far from a beginner investing activity. I eventually would like to make a course if I get enough requests and the channel grows to over 10,000 subscribers, but for now, I'll just mention it towards the end of my videos sometimes for the folks that are really looking to grow their knowledge. So this week, I sold puts on American Airlines. I collected $400 by selling 8 puts at the 12 strike. I believe I actually entered the trade last week, but I just got assigned the shares on Friday. And basically, because the shares fell below $12, I was forced into buying 800 shares. And my strategy is I will do something called the wheel, where on Monday, I now own the stock and I own 800 shares. I will sell 8 covered calls and collect another $400. I'm gonna leave it there. Maybe I'll write a little bit more in my description, or if you guys are interested, just let me know. I love all your support, and my plan is to make you guys smarter investors and put my finance degree and Wall Street experience to good use, helping others attain financial freedom. That's it for this video. Be aggressive in attaining knowledge, but always invest safe.
push over limits with you right now. Gotta get it right now. Yeah, push over limits.